Let's talk about cryptocurrency. Yes, again. But this time, it's not just about meme coins or celebrity NFTs. Crypto is back in the headlines because the world's two biggest economies, the US and China, are now locked in a digital showdown over the future of money. This isn't just about Bitcoin anymore. It's a technological and financial cold war, fought with code and digital wallets. The outcome could reshape global power, determining who sets the rules for the world economy for decades. For years, the US dollar has been the world's reserve currency, giving America enormous influence. But now, China is building a new kind of digital money that could let countries bypass the dollar system entirely. That sent a jolt through Washington, forcing a scramble to catch up in a game they barely understood a few years ago. Crypto has evolved from a niche hobby to a critical arena for geopolitical competition. This is the new space race, except the prize is control over the world's financial plumbing. And the US and China have wildly different blueprints for how that plumbing should work. The stakes? Nothing less than the future of money itself. So buckle up, because this battle is just getting started. For years, the US government treated crypto with skepticism. Regulators warned about scams, politicians dismissed it as funny internet money. Even former President Trump once called Bitcoin rat poison squared. But now, the script has flipped. Trump is suddenly the crypto president, promising to protect the industry and keep China from dominating digital assets. This isn't just one politician changing his mind, it's a massive shift in Washington's thinking. The US has realized that ignoring crypto means risking being outmaneuvered by China. Congress is now fast-tracking crypto legislation, trying to replace chaos with clear rules and keep innovation on American soil. The most telling move? The Anti-CBDC Surveillance State Act, which would ban a government-run digital dollar. Instead, the US wants the private sector to lead, betting that American tech companies can out-innovate state-controlled systems. It's a philosophical choice, a private, open digital future versus China's top-down state-managed approach. The US is drawing a line in the sand, and the world is watching. Crypto is no longer a fringe experiment, it's a core part of America's strategy. The race is on. In this battle for the future of money, one word matters: stablecoins. Stablecoins are cryptocurrencies pegged to real-world assets, usually the US dollar. For every digital coin, there's supposed to be a real dollar in reserve. Think of it as a digital poker chip you can always cash in. Their main appeal? Stability. Unlike Bitcoin, stablecoins don't swing wildly in value, making them useful for payments and trading. They're becoming a major force in global payments, letting people send money across borders in minutes, not days. And here's the kicker. Because most stablecoins are pegged to the dollar, they're exporting American financial power into the digital world. Every time someone uses a dollar-backed stablecoin, they reinforce the dollar's global dominance. Stablecoins aren't just clever tech, they're a geopolitical tool. That's why Washington is suddenly paying close attention. The US sees stablecoins as a way to keep the dollar on top, even as money goes digital. In the new financial Cold War, stablecoins are America's secret weapon, and the world is starting to notice. Why the sudden US embrace of stablecoins? One word: China. Washington used to worry stablecoins were risky, but now sees them as a weapon against China's digital currency ambitions. The strategy: regulate stablecoins, make them safer, and turn them into a digital proxy for the US dollar. The Genius Act, for example, sets clear rules for stablecoin reserves, ensuring digital dollars are always redeemable. By legitimizing stablecoins, the US hopes to encourage global adoption and keep the world on a dollar-based standard. Ironically, even as China bans crypto at home, Chinese businesses use offshore stablecoins like Tether to move money out of the country. US policymakers see this and think, if even China's elite use dollar stablecoins, imagine the global potential. The American bet? A regulated private stablecoin ecosystem is more attractive than a state-run digital currency. The US is positioning itself as the champion of financial freedom, offering digital dollars without Big Brother surveillance. By promoting stablecoins, America extends its influence without building its own government-run digital dollar. It's a strategic gamble: American capitalism versus Chinese state control. The outcome could shape the future of global finance. While the US debated, China built. China's central bank digital currency, the e-CNY or digital Yuan, is now the world's largest CBDC pilot with over 260 million users. It's integrated into daily life, used for groceries, transit, even government payments. But the digital yuan is the opposite of Bitcoin. It's centralized, fully controlled by China's central bank. Every digital yuan is programmable and traceable, giving the government unprecedented surveillance power. The e-CNY is more than a domestic tool. It's China's bid to challenge the dollar's dominance in global trade. For decades, the US has used the dollar and networks like SWIFT to enforce sanctions and control global finance. The digital yuan offers an alternative, letting countries trade directly, bypassing US systems. China is pushing the e-CNY for cross-border payments, leading projects like M-Bridge to build new international payment rails. If successful, this could erode America's ability to enforce sanctions and weaken the dollar's global role. It's a slow, strategic play to rewire the world's financial system in China's favor. The stakes? Control over the future of global money flows, and China is playing the long game. The US and China's digital currency strategies reflect their core ideologies. America is outsourcing its digital dollar to private companies, betting that competition and open technology will win. The government acts as referee, not player, believing a decentralized open system is superior. By promoting stablecoins on public blockchains, the US offers transparency and freedom, aligning with its values of free markets and individual liberty. The pitch uses our digital dollars, built on open tech that even the US government can't fully control. China's approach is the opposite. The e-CNY is a closed, centralized system, fully controlled by the state. This allows rapid deployment and integration, but at the cost of privacy and freedom. Every transaction is visible to the government, enabling both economic management and political control. The world faces a choice: the innovative open American model or the efficient, controlled Chinese one. It's not just about currency. It's about two visions for organizing society in the digital age. The stakes couldn't be higher. The US-China rivalry has sparked a global race for digital currencies. Over 49 countries are piloting their own CBDCs. This is no longer a fringe experiment. Major economies like India, Brazil, and the EU are moving forward, hoping to modernize payments and maintain monetary sovereignty. They want the benefits of digital cash, but fear being forced to pick between a US-dominated private system or a China-dominated state system. Developing their own CBDC is a way to stay independent in a digital world. Meanwhile, the US stands out by pumping the brakes. The Federal Reserve has halted work on a digital dollar thanks to political backlash and privacy concerns. Americans fear government overreach. A surveillance coin is a non-starter. Instead, the US is betting on private stablecoins to maintain its financial leadership. It's a risky move. America could end up the only major power without a state-issued digital currency. The world is moving fast, and the US is gambling on a different path. Only time will tell if that bet pays off. The crypto market's explosive growth sets the stage for this global drama. Crypto's market cap soared to $2.8 trillion by 2025, driven by institutional investors and regulatory clarity. China was once the center of the crypto world, home to most traders and Bitcoin miners. But in 2021, Beijing banned all crypto mining and trading to clear the way for its digital yuan. This created a power vacuum, and the US filled it. Crypto miners flocked to America, making it the world's leading Bitcoin mining hub. The US now controls about 35% of global Bitcoin mining power, giving it influence over the network's infrastructure. Here's the paradox. China bans private crypto but pioneers a state digital currency. The US bans a state digital currency but leads in decentralized crypto. Each dominates opposite ends of the digital currency spectrum. Their divergent strategies are shaping the infrastructure of the financial future. The world is watching as these two titans battle for dominance. The outcome will define the next era of money. We're at a historic crossroads. The US and China are fighting for the future of global finance. For America, it's about defending the dollar's dominance and the power it brings. China's digital yuan threatens to fragment the global system and weaken US leverage. The US is betting on private innovation and open systems. China is building a state-controlled alternative. Each path reflects their core values: freedom and capitalism versus control and efficiency. The world must choose: trust the messy openness of the US model or the streamlined control of China's. The outcome will shape not just how we pay, but who holds power on the world stage. Will the future be split between rival blocs, or will one model win out? The technical decisions being made today will echo for decades. The winner may get to write the rules for the 21st century economy. The stakes? Nothing less than the architecture of global power. And that's a prize both nations are determined to claim.